Hello, and welcome to the Robin Report webinar series. Today, I'm Shelley Cohan, and today I'll be hosting your show today, which is Holiday 2020, Fasten Your Seatbelts. Of course, Holiday 2020 will be unpredictable at best. The retail industry is converging on a storm of global health crisis, massive economic disruption, ongoing civil unrest, and of course the upcoming elections. So we'll have a very vibrant conversation today. Before I tell you a little bit about our speakers, let me just take care of some housekeeping today. We'll have the opportunity at the end of today's webinar to answer any questions you have. You can ask a question by simply going into the Q&A and typing in your questions. And we'll do our best to answer all the questions that we can today. All participants are in listen-only mode, which will remain that way through the remainder of the webinar. But let me tell you about the guests that we have. Robin Lewis is the CEO and founder of the Robin Report. He's co-authored the New Rules of Retail and Retail Seismic Shift, and he has had senior positions DuPont, VF Corp, WWD, Goldman Sachs, and of course, quite frankly, an icon in our industry and super opinionated. Joining him today is Steve Sadove, who served as chairman CEO of Saks Fifth Avenue from 2007 to 2013. And then, of course, prior to going to Saks Fifth Avenue, Mr. Sadoff has built a distinguished marketing and consumer products career spanning more than 25 years, including General Foods, Bristol-Myers Squibb, as president of Clairol. We also have with us today Dick Johnson, who was the elected president and chief executive officer of Footlocker, and now is also a chairman on the board. Mr. Johnson served as the executive vice president and chief executive officer at Footlocker in the past and is responsible for the company's domestic and international stores as well as business development. And then we also have Jennifer Davis with us, who is the managing director at the Consumer Retail Group in Investment Banking Services. She's currently with Goldman Sachs, and she heads up the retail consumers and retail sectors part of Goldman Sachs. So Robin, I'm going to turn it over to you to get us started.
Thank you so much for joining us. We're going to have a great conversation today, mainly because we have three of the most brilliant brains in retail, as far as I'm concerned. And we're going to be talking about the state of the economy and the state of the industry in the middle of what I metaphorically call the perfect storm, which Shelley mentioned before. Perfect storms, three colliding weather fronts. In this case, it's a pandemic, a collapsing economy, civil unrest, and then there's a fourth, which is we are headed into an election season, the likes of which we have never seen. So here we are, and you might say, well, where is that? So I'm going to give you a little brief on where I think we are. I'll use another metaphor, and I will say that at this point in time, we are either at the gate of hell or the heavenly gates, okay? So let's go with the hellish idea here. So the point is, these questions, are we headed into another more horrible wave 2 of the pandemic with a combination of these viruses? And are we headed to more another lockdown, economic lockdown, more trouble in the cities, and also fueled by an election season that really we are seeing some raw hatred out there? So is this a backdrop for our retailers as they head into the most important season of the year for them, where roughly 30% of their annual revenues come from this season? Or are we at the gate of heaven, which is, can we expect a vaccine to be broadly distributed? Is the government going to fire hose more stimulus into the economy, to consumers and businesses, so they can get us on some kind of a V-shaped recovery? And are we going to have some kind of a reconciliation between the federal, state, and city governments to kind of quell some of this unrest? And will all of this happen before the holiday season, which most retailers are saying it's going to start in early October? So if I were a gambler, and I always say, what the odds of this happening before the holiday season, the chances would be 0. So yeah, we're going to have a combination scenario between hellish and heaven. And how is it going to affect consumer shopping behavior and spending during the holiday season? The answer to that is we obviously do not know. We're still in the world of unknowns, but one thing we do know, and that is Christmas and the holidays are coming. And therefore, the consumers are probably going to want a lot of cheer this year, and they will probably spend a little more to get that. So with that kind of sobering view of the state of the industry, I'd like to start the conversation with Dick, because obviously he's running an $8 billion retail business right now. And I want him to get into his ideas of what the holiday season is going to look like. But first, Dick, and real briefly, we kind of, the discussion of back to school is kind of nowhere. I mean, are we in the middle, end, beginning, or did it never begin? So maybe you can give us a little color on that. I do know that your Q2 results were better than expected, comps almost 19%, and direct-to-consumer online of 173%, unbelievable. So anyway, give us a picture in the middle of schools opening and closing, starting, stopping, et cetera, and so forth. A quickie on back to school, and then we'll get into holidays.
Yeah, Robin, I can't really comment on our season-to-date, quarter-to-date numbers. We don't do that publicly, but I can tell you that this back to school is unlike any other, right? So whether it is the staggered return to school, some people going back virtually, some people going back physically. We saw it even in the end of Q2 with the shifts in tax-free holidays. There just are a lot of unknowns and uncertainties. Ties back to sports as well for us. Our kids are fans, they're players, et cetera. So the situation remains very fluid, and we work hard to manage that situation. Certainly, the second quarter showed us that when we've got great product and the consumers got money in their pocket, they love to shop, and they shopped both online and in stores. And certainly, traffic is down with the social distancing and the protocols that we have to follow. But we continue to believe that our category specifically has some heat around it. And when that happens, the consumer comes out. So I think that will help bring them some holiday cheer. And certainly there's kids that have new sneakers on their feet as they're going back to school as well.
So one quick follow-up to that, and I naively learned about this brand yesterday. I never heard of it. And I thought, God, I got to ask Dick about this. It's StockX. And what I'd like you to do is, I don't know if everybody's as naive as me. Maybe it's a well-known brand, but can you give us a little idea of what that business model is? And are they going to be any kind of a threat to you guys?
Well, we believe in the secondary market, Robin. I mean, the secondary market for hot sneakers has been around for a long time. We made an investment a year and a half ago in a company called GOAT, which is very similar to StockX in that they deal with consumers to consumers. One of the reasons that we have kids line up to buy sneakers, whether they line up virtually or they line up physically, is that they believe there's some resale value, and both StockX and GOAT do that. So, and we think it adds heat to the sneaker market. The fact that you can buy a retro Jordan or a Yeezy or an Air Force One that's special and subsequently sell that, there's a big business that goes on. But the reality is that heat in the secondary market just continues to drive heat in the primary market, which is obviously where we operate.
Are they kind of a new, different phenomenon, though? In that,
Oh, they've been around for a while, right?
Oh,
I mean,
okay.
they've. Like I said, we invested in Goat and StockX are, in my opinion,
oh, okay.
the two makers of the secondary market. And Goat clearly has invested to do things one way. StockX is doing them a little bit different, but we really like the secondary market. We believe that there's a big future in it, and it continues to fuel what we do every day.
Okay, great. So back to school, real briefly, Steve or Jennifer, do you guys want to add any comments to that in terms of the overall industry?
Go ahead, Jennifer.
Jennifer, you want to?
Yeah, look, I am back to school. It's been quite widely reported that several of the folks have said it's been a slower back to school season. But when you take out actually apparel categories, spending in August was quite strong across retail. And so, I think it'll be interesting. It's definitely, this environment has been so bifurcated, kind of a barbell effect across sectors of retail. So if I just think about just purely as a barometer, stock price performance since the start of COVID, for example, you've got home retail, discount, food retail, auto parts players up, 50%. Since February, and then you've got department stores and branded apparel accessory players who are, down anywhere 30 to 50%. So it's definitely been a case of haves and have-nots, and I think that's
Right.
continued through back to school.
Yeah, I mean, I'd echo where Jennifer's talking about. Put it into context that when the virus hit, overall retail in March-April timeframe was down about 12%. That was total retail across all sectors. If I look at May, June, it was down in the 4% range. And July, August, it's down about 2%. And right now it's tracking about flat. So you've had this flattening, which is a major recovery relative to where the trend was back in March, April. You've had this massive shift to the internet. So right now, roughly 20% of all commerce is being done online. But it's being done in a contactless, buy online, pick up in store. Your comment about the resale market, the consumer wants a product any way they want it. They want rental, they want resale, they want, but there's a very big difference between the winners and losers. And the winners were exactly the categories Jennifer talked about, but it's also things related to home. People have been cooped up. They're casual. If they're going to buy apparel, it's athleisure. It's I might be wearing shorts right now. You don't know. I'm on Zoom calls for 10 hours a day. And, suppose you're in the tie business. I wouldn't want to be in the tie business right now. And people want to feel safe. And safe can be contactless, and safe can be going into a store that lets you have one-stop shopping for everything. Or it could be into Dick's stores, which are highly differentiated in terms of the product offering.
I do have shorts on, by the way, Steve.
Good. That's fine. That's okay.
Yeah. So that was a question I'm going to have about flip-flops. Is that eating into the sneaker business?
Well, I guess if you think of the UGG Fluff Yeah is a flip-flop, but consumers are about casual and comfortable right now. Steve said it best.
Yeah.
Who would have thought that fleece would have been a driver of the business in the second quarter? But people are sitting at home. They've got their hoodies on. Our consumer certainly is about casual, comfortable, and flip-flops are important, but they still love new, fresh, hot sneakers, Robin.
Good for you. All right, let's wade into the holidays. I don't expect any of you guys to give me a specific number or anything, unless, Jennifer, I don't know if you can talk about what Goldman sees in terms of percentage or anything, but I do want to get all three of your opinions on this. We did do a survey, and 63% of the respondents, no brainer, they said that the holiday season is going to be lower than last year, obviously. But Jennifer, you got anything you want to add to that?
Yeah, I think about it in two buckets. One from a macro basis in terms of our institutional views. And actually, Goldman just recently bumped up our third quarter GDP forecast to positive 35%. That's about 14 points above consensus today. A
Wow.
lot of that is due to the strength on consumption that, I think Steve articulated well, that we started to see some stabilization through the summer. I do think we're, somewhat guarded going forward, just in terms of thinking about consumer confidence is still quite low. When you think about wage growth and full employment, it's going to be a very long, slow slog. But in the immediate near term, we actually think consumer spending will increase about 5% in the
Really?
fourth quarter. So I think that will be interesting. There was a good survey out by Deloitte that came out just this week that said they expect retail sales to come up 1 to 1.5% for holiday this year. And again, that's going to be somewhat bifurcated by income cohort, with middle and high income earnings spending more as they're not traveling and eating out and so forth. But lower income households more flat to maybe up slightly 1%.
Yeah, I mean, I'd build on Jennifer's comment. I think that, it'll be a muted season. I don't know whether it's going to be up 1 or 4 or 3. I mean, we're clearly starting to move into the positive territory. The lower income consumer had been outspending on a rate basis than the higher end consumer because of the government support programs. My guess is that'll flip. You're starting to see luxury actually starting to perform better because the higher income consumer has the money and they haven't been going out and spending, and experiential is not what they've been doing. So they're buying stuff. I just am concerned a little bit. We're focused on the stock market, and I differentiate Main Street from Wall Street.
Mm-hmm.
And I also separate the big box guys who are the winners, who have made the technology investments, who are safe, places where everyone's comfortable going, and Main Street, which is the small business, and where I worry that you're probably going to have 25% of restaurants in the United States closed down. And you're going to have a lot of carnage. That overall holidays will be healthy and the winners will win big. But the trends of the Home Depots and the Lowe's and the Footlockers, I feel very good about. I'm not so sure I feel so good about if I'm that small little store on Main Street and how they're going to fare during the holidays.
That's good assessment. And I'm surprised that Goldman is so optimistic, but that's good news. So there's another metric from our survey that said that this holiday season, that's 37% of the sales will be online, which is an incredible 70% increase from last year, but kind of no surprise, right? I mean, I think that,
Well, you were at 100% a few months ago, and last month it's been 70% about where it's been. And when you say 37%, it depends on what categories they're measuring. Are you including grocery in that number? Are you, it's going to be high on apparel. It's going to be higher than it was on grocery, but it's still going to be relatively low. I look at numbers that are closer to 20% of all commerce being in digital, but at 37% in certain categories. But even having said that, let's assume it's 37%, that still means 63% is going to be in a brick and mortar store. So I just worry when everyone starts throwing out and saying everything, the world's all digital. It's converging, but I sure wouldn't walk away from the importance of stores.
Well, and Steve, we were talking about the importance of, these alternative distribution models with buy online, pick up curbside, pick up in store. And so where are those digital sales actually being captured? And so the importance of that omni-channel model is still very critical.
Yeah, we agree 100%, Jen and Steve, on both cases, right? We've made big investments in our infrastructure to support the digital business. At the same time, I'm a firm believer, our company's a firm believer that stores are a critical piece to it. So, we ship a lot of inventory out of stores direct to homes. We use the 2,000 stores here in the U.S. as distribution points and pickup points. It all becomes muddled on what channel it is. I don't think in terms of channels, right? I think in terms of satisfying the customer.
So Dick, for your business, do you view, you've got the sneaker culture, and do you feel that they are going to be, that their shopping behavior is going to be kind of different from mainstream consumers?
Oh, I think their behavior's always been a little bit different, Robin. They're absolutely driven by the latest technology, the highest heat product, the best collaboration. And, it's a fine line between need and want when the high heat product comes out, right? It's all very much about, a want state for our product. But there's a moment when they find out that shoe X is coming out, that it becomes a very big need for them, because they have to use that sort of as their badge, as their uniform. And, so they shop differently. They very much have never hesitated to get up in the middle of the night, sit out in bad weather to get in line prior to our having a launch reservation app. Now that we've got that, we've taken some of that out. But they will continue to shop different and influence the marketplace differently.
So, guys, what's the cadence going to be this holiday season? Is it going to start earlier? And is it going to be longer? Are we going to see spikes like Black Friday? And how is Amazon's Prime going to affect everybody else?
All the above. It's already. I think it's already started. I mean, it's going to be we're in this period where, I'm teasing a little bit, but whether it's beginning of October, end of September, Amazon Prime will be, I don't know, whatever it's going to be, 20-something of October. It's all going to converge, and you've already had stores announcing they're not opening on Thanksgiving, and you're not going to get a massive crowds going for the big deal, because the deal is going to be earlier, and it's going to be a flattened over the season. It'll be promotional, but inventories are much more in line than anybody ever thought, so that you're not coming in with this massive excess of inventory that you have to deal with, but you're going to be promotional like you'll always be promotional during the holidays.
Yeah, our survey said that most of our respondents said they were starting into the season with a low inventory. Dick, how do you feel about that? What's your inventory look like going?
Yeah, as we ended the second quarter, Robin, our inventory was down 3%. So our team did a great job. When we started shuffling orders and pushing inventory around and moving it, back in March, we had no idea. Everybody was locked down. Every store was closed. We had no idea what the opening looked like. So our team did a great job to get ahead of it. I agree with Steve that there's going to be a promotional cadence, as there always is in the holidays. But we go in with a position where I feel good about our inventory. I feel good about the quality and the quantity of our inventory. And our vendor partners do a great job of flowing high heat product for us through the season. And that ultimately, for our consumer, that's ultimately what motivates them. So, the one thing that's a truism is that Christmas is going to be December 25th, right? So people are going to make adjustments to their schedule accordingly because of social distancing, because of their concern about crowds or whatever it is. So I certainly think that it's probably already started. Steve's right that people are looking at deals already. They're starting to figure out their holiday patterns, but it is going to be longer without a doubt, Robin.
Yeah, but the other thing about the low inventory, I had a few discussions with several retailers out there that one of the concerns is if it's too low, they're going to be losing sales. And also, if the supply chain issue across the board in retailing is all screwed up, and are they going to be able to chase and get goods to fill in quickly enough to meet demand? I also was told that a lot of, and maybe it's more in the apparel, that once the doors shut down on retail, and Steve, maybe you can comment on this, that and again, particularly apparel, that these stores, rather than facing a bloodbath of promotions, immediately sold a ton of inventory to the off-pricers. Is that something that you...
I don't know, because the off-pricers are having a hard time sourcing some of the product. They're low on inventory. I think that a lot of it just got canceled, ordered, and pushed back to the vendor community. So I think a lot of the vendors and suppliers were really hurting as a result of it. So because everybody's inventories are in line, and if you look at the TJXs and the Rosses, they were saying that they were chasing inventory.
Do you think in the case of low inventories that it's an opportunity to increase margins, not be so promotional?
You've got to be very careful. I don't know about that because it's still a very competitive, there's still a lot of product out there and there's a lot of competitors, and we've got a lot more stores in this country than we need. And so I would expect that it's still going to be somewhat promotional. I don't think it's going to be crazy promotional like when we had to do the discounting during the 08-09 recession, but I think that you're going to have normal cadence of discounting.
So Jennifer, you got anything? Go ahead, Dick.
Well, I'd agree with Steve. I think that the marketplace will be promotional, but we have to remember that we're sort of sitting in unprecedented unemployment numbers. You don't know whether the second bout of stimulus is going to come through. So, the consumer's pocketbook, is going to have to be very directed on where he or she goes to spend. So, deals will be important, but again, I don't think it will be overly promotional.
Yeah, and I would go back, and it's somewhat related to all these points. What you had asked Robin a few minutes ago about the impact of Amazon and Prime Day, and obviously they had shifted that from what was normally a 2-day event in July. It's rumored to be coming up soon in early October. That's pretty meaningful. So last year, sales from their Prime Day exceeded their combined sales from Black Friday and Cyber Monday for Amazon themselves. When you think about consumers today, I think a third of them have said they expect to buy something on Prime Day this year, versus a quarter on Cyber Monday and 16% on Black Friday. So that's a pretty seismic shift, both from a calendar cadence and a proportion basis. And then you layer into that, and I know we'll probably get to this in a few minutes as well, but if there's a second outbreak of COVID and that Prime Day gets further pushed back into November, and or you think about the election cycle on consumer psyches, how does that impact spending overall? So I think it's going to be a choppy distribution of sales.
Yeah, well, you mentioned elections, and that was another question. What do you guys think the elections are, the influence of the elections? Well, I guess it's all those other things as well. I mean, not just the elections, but you got any ideas about the elections? I mean,
I don't think the elections affect the consumption pattern that much. I think a stimulus package, whether or not a compromised stimulus package and dollars went in people's pockets, that affects it dramatically. I don't think the next 4 or 5 weeks, people will be fixated on the election and television ads will be flying back and forth, but I'm not so sure it's going to affect the consumption pattern that much. A second wave would. You start having to have a second wave in closed stores, that's going to have a dramatic effect.
Yeah, I'd agree. We made an announcement yesterday, Robin, that we're all of our stores and our digital sites are supporting the Rock the Vote effort. So we think the election is important to make sure that people get out and vote.
Oh, right.
There's 4.2 million people that are going to have the opportunity to vote in the first national election, right? I mean, young people that we want to make sure to get out and vote, but I don't necessarily believe that it changes the consumption pattern. I think there will be a lot of attention to it. Clearly, we want the energy put around getting people registered and ready to vote, and then whatever happens, happens.
So, yeah. So and Jennifer, you touched on this a little bit with more optimism. How long do you think, and I guess a lot of it depends on the vaccine, how long will it take the retail industry to kind of claw its way back to some semblance of what it was before which, by the way, things weren't so great before the virus. What do you have, GDP of 2 to 2.5% for a long time? Yeah. So I don't know. What do you think, Jennifer, from
Look, I think some of our optimism is very near-term focused, and it's focused again. It's somewhat bifurcated by industry subsector, and I don't think retail is unfortunately on the right end of that ledger overall. Institutionally, we still think it's more of a swoosh-shaped recovery overall. And if you look at our forecast all the way out to 2022, again, this is just on a macro GDP basis, we're still at a 3% gap overall from where we were pre-COVID. And again, that's the market as a whole in terms of GDP. That's not just retail. For retail specifically, McKinsey published an interesting report that said they think it's going to be between 3 and 10 years before the retail sector fully recovers. So I think it's going to be a much slower, longer recovery. But that being said, a lot of the themes we've already all been talking about over the past half hour, I think will hold true in terms of the winners and the losers. And there's going to be a shift and out of, higher end, fancy apparel to wear to work, and the Thai manufacturers into sneakers and athleisure and into investing in your home and health and food at home. So I think it's going to be somewhat delineated by what sectors of retail you're talking about.
Yeah, I mean, look, remember the trend coming in just pre-pandemic, overall retail was growing about 4%. Let's give or take a little bit, but that was about the trend. And now we're at flat. So and should we expect to see low single digit? Will it get back to a 4% in the next couple of years? I think it probably will, but it goes back to the winners and losers. I've heard the swoosh recovery. I'm actually thinking right now and have gotten thinking about that K recovery. And the K recovery tells you that you have the winners and you have the losers. And it's not retail per se in general, because retail is going to be reasonably healthy. It's going to be different in that there are going to be sectors within that are going to be of that almost a V-like, and there are going to be others that, am I going to be betting on the mall? Am I going to be betting on apparel companies inside of a mall? I mean, there's going to be differences that are quite stark and dramatic, and the winners are going to continue to get better.
So, Dick, you got any add to that at all? I think.
Well, I wish I knew what sort of recovery it was going to be, right? That's why I keep listening to people like Jen and Steve to get more insights. But, I think retail is a pretty adaptive industry. And I think there will be winners and losers. I think the people that have invested to satisfy their customer, regardless of the channel, and create deep engagement with their customers, have a much better chance of coming out of it in sort of the V on the K, as Steve referred to it.
Yeah.
So I think that it all comes back to the consumer at the end of the day, and taking care of that customer, creating deep engagement with the customer, and knowing that you need to satisfy that customer's needs and wants in whatever channel, however they want to be satisfied, I think is just critical to the future success of retail in general.
Yeah, let me just build on Dick's comment for a second, because I think back to 10 years ago when omnichannel didn't exist, and I don't know, I may be wrong a year or two off of it, but when we first started this, it was multi-channel, and we were talking about making investments on single view of the customer, single view of the inventory, moving product around. And those were major technology investment decisions that had to be made that had implications for years down the road. And the question to me is, right now we're at a point where there are other technology investments to what Dick's talking about in terms of knowing your customer, understanding, being able to personalize, customize, that have to do with analytic investments, data investments that are going to have ramifications down. Loyalty programs are going to be totally different. Personalization. Those kinds of investments are the next wave of investments. Omnichannel is, to me, it's table stakes. If you haven't done the basic omnichannel investments, then you're one of the losers and you're having a hard time playing. I'm looking at it now saying, what's going to be the next 5 years, because you have more technology investments that are different than the old ones. So if we're just talking about buy online, pick up in store, that's not really the answer for the next 5 years. And I'm thinking about what are the investments that you have to be making today that are going to fundamentally affect the longer term. And those are the kinds of things Dick's talking about.
Yeah, for sure. Yeah, that's that whole personalization thing. It's where you connect with the consumer and how you become a part of their DNA and you know everything about them. And that's all possible today with technology, as you're saying, Steve. Steve, another question. You touched on this. I want to throw it back out there. Main Street is not Wall Street. And this income gap, which has been going on for a long time, do you think it will narrow? Do you think it will continue beyond the pandemic? Do you think the pandemic made it any worse? I suppose that the shutdown of the economy certainly did, but.
Well, I guess the question to me, and I throw back to everyone to talk about, is why do people still go back to the 75% or whatever the number is going to be going into a store? But what they want in a store is not just getting the product. There's an experiential piece of this thing. And believe me, I feel like I've lost some of the experience sitting in my house all the time. So there's a reason I want to get out into a store. And the way that Main Street ultimately is going to be, if they're going to get back in the game and win, it's going to be because of localization, because they provide a unique experience, a community space, whatever it's going to be. But it's not just about having that physical product unless it's a totally differentiated product. And so that's where I would focus, and how Main Street comes back is going to be how do they do it in a way that gets the consumer excited again?
Yeah.
Robin, I would just add to what Steve said. I mean, when you think about the income gap, I absolutely think it has widened and sadly will continue to widen as a result of this pandemic. And you just think about pure job losses, the lowest 20% of earners accounted for more than a third of the job losses that we saw. And you're seeing, unemployment rates in the mid-teens for those wage earners that have less than a high school degree versus, mid to high single digits for those with a college degree. And I think you layer that into, not that this is a more societal webcast today, but you just think about, the impact of education and back to school and virtual schooling and in terms of those cohorts. And I think it will have, effects for a long time to come, sadly.
Well, there's an economist, Tom Piketty, a French economist, who wrote a book and said that when you've got an economy where capital is investing in capital and not Main Street, that income gap will just continue to grow and grow. And he's got the doomsday scenario that one of two things happens over time, and that is you either become a plutocracy or you have a revolution. Anyway, that's a whole other discussion we could have. All right,
I just sell sneakers, Robin.
Anyway, so the apparel business we know is scraping the bottom because of this thing, and I think footwear may be a little bit different than the broader apparel category. But what are the specialty and department stores going to look like next year? One point is that the work from home, Zoom stuff, those people who meet like us, we don't need, all we need is a nice shirt. We talked a little bit about this, but so apparel will probably come back differently, I guess, right? It's moving towards more casual. Anybody want to comment on that?
Well, we certainly saw it in the second quarter, Robin. I mentioned it earlier, but people being casual at home, cocooned, call it whatever you will. Kids that are doing virtual school, like Jen referred to. You just dress differently. It is a different sort of environment, and I think that apparel companies, people that you work with on the apparel front, just need to be agile and react as well. And there are brands that may suffer a little bit because they're a more premium dress sort of brand. Steve referred to tie makers before. And I can't honestly recall the last time that I had a tie on. And some of my ties from the '80s are probably back in style again. So I guess that's a good thing. But I think that apparel, like any category, just has to be agile and adjust to where the consumer's moving to.
But look, take the company I used to work for, Saks. Go to the men's floor in the New York Saks, and they've totally reconfigured and reallocated space. So now you have a massive sneaker and casual shoe in the center of the floor, and the consumer, and whereas it used to be all about the tailored suits, now it's about casual high-end sneakers, and they're selling $1,000 sneakers, and the overall business is healthy. So I think that you've got to look at, use your word, agility, so that the consumer is there. but it's different, and you've got to provide what it is that's going to appeal to them now. And they still want fashion. I mean, if you had asked me a number of years ago, were consumers going to go out and spend $1,000 on a pair of sneakers, I'd shake my head. And now that's very much the case.
Yeah. Well, I just got pinged, which means that we are ready to take questions from our audience. But I want Dick to give me like 2 minutes on an initiative that he, has put forth. This is the last issue that I want to touch on. We have been emerging way too slowly in our country. In my opinion, it is corporate America's responsible role in its communities and among its customers. And so I think there could be one good result coming out of this perfect storm, and that would be corporate America's awakening to the need to hurry up and, as I say, walk the walk. I mean, everybody's talking the talk about, social and so forth and community. So, Dick, I know you guys just launched something. Just want you to explain what you've done.
Thanks, Robin. I really appreciate the opportunity to talk about it because it's an important topic to us. We've talked about being significant parts of the communities that we work in and that we live in. We clearly have a large population of Black employees, and the Black Lives Matter movement is, one of those societal things that we all have to address. And, we made a commitment over 5 years to invest $200 million, in both educational and economic opportunities. I think that by expanding educational opportunities, we ultimately end up fueling economic opportunities as well. But it's a realization that while we've participated in the communities and been in the communities, we really need to belong in the communities. And I tie this a little bit, Robin, to the community store work that we've done. And we opened a community store in Detroit where 85-90% of the people could walk to that store. A big store that we hired locally. We brought in people that knew the community. We did the same thing on 181st Street, in New York City, and we just opened another community store out in Compton. And it really is about giving back to the community. It's about participating in the community, making sure that we fuel the economic efforts in those communities. We've got a great relationship with Dwayne out at Pencil Academy, and we're going to continue to fuel funding there to make sure that Black designers have a place and a way to develop their skills. And we're going to continue to invest in the associates in the communities in which we live. So I think we're incredibly excited about the initiative. As we look to buy more from Black businesses, Black-owned businesses, et cetera. The futures basis makes it a little bit difficult to get the momentum, but the team is fully behind it, and we're really excited to get the effort rolling forward.
Dick, because of leaders like you, I really believe this now. There has been the talk for many, many years, but I really think that this may be an inflection point because of a lot of the initiatives that are being made across the industry. And so I commend you for that.
Well,
so,
thank you, Robbie.
So, Shelley, you want to start the questions?
Certainly. So the first question is, and it really geared toward Dick and Steve, does COVID and its impact in accelerating the structural trends such as direct-to-consumer mix for brand owners make life for resellers such as Footlocker and Saks Fifth Avenue more difficult? And how do you protect market share? How do you view relationships with key partners as they are increasingly competing with your own distribution model?
Well, I'll jump into that, Shelley. And clearly it's been the perfect world for retailers was back when retailers were retailers and wholesalers were wholesalers. That ship sailed a long time ago, right? So we have to be in an environment, certainly in our case, where we find constructive ways to work with our vendor partners. We identify new customers, new ways to bring products to customers, and certainly their investment in going direct to the consumer, puts the pressure on us to perform at even a higher level, right? I think it goes back to my conversation earlier about making sure that we've got deep engagement with our customers, the better we know our customers, the more likely we are to bring them into our ecosystem and service them.
And I'd echo Dick's comment in terms of understanding, it's incumbent on the retailers to understand their customer even better. My guess is that as brands want to control their own destiny a lot more than they have in the past, that you're going to end up with more new business models. That what you're going to see the evolution of what is in Europe and Japan is concession models. I think you're going to see more of that than you used to. I think you're going to see less stores. So this is accelerating change that was already occurring. But I think business as usual in the old way of a traditional wholesale business model is an antiquated way of thinking about it. And you're going to have to look at new ways of doing business.
Great, thank you. The next question we have from our attendees is really not geared to anybody, but what do you think about the new 10-10 holiday starting by Deborah Weinsing and Shopkick? And just to explain quickly for our attendees about 10-10, Happy 10.10 Day is the October's 10th U.S. shopping event meant to mirror the Singles Day in China, 11/11.
Anytime you can draw attention to shopping and give people more reasons to shop, I'm all for it, right? The thing that you have to remember is that Singles Day is a big day even here in the U.S., right? There's a fair amount of people that celebrate that day, and 11/11 is a big day. And if 10-10 can draw some attention and drive people out to spend money, I think it's a great idea.
I love the idea, and I've talked to Deb about it several times. The question that I have, and anything you can do to get people out shopping is terrific, as Dick's saying. You need to have an Alibaba or something behind it to generate awareness of the concept. So the issue or the question to me is, how are you going to generate awareness? Amazon creating the awareness of an Amazon Prime Day enables you to get that awareness. It's going to be very hard in the next 3-4 weeks to generate the kind of awareness to make it a big deal. I'd love to see it happen.
Great, thank you. Jennifer, I have a question for you. Once the government stimulus support subsides, what do you believe GDP will be in 2021, and how deep and long do you predict the recession will be?
It's a good question, and one I think a lot of folks are asking. So we our institutional forecast for 2021 is that GDP growth in the U.S. will be a positive 6% in the U.S. next year. Again, that's above consensus today, and so we're relatively bullish. A lot of that is predicated on a vaccine, and we do think that there'll be a vaccine available likely by the end of this year, although not likely in mass distribution until sort of towards the end of the first half, but that'll catalyze a lot of the recovery. That being said, I'd go back to some of my comments at the outset that over the longer term, in terms of thinking more forward past 2021 into 2022, although there'll be a recovery, I think we're not going to quite match where we had been expected to be at the outset of the crisis.
Great, thank you. Steve, I have a question for you. Do you believe the department store model is broken, and which companies are best suited to survive this evolutionary change?
I think the department, I said before, I think the department store has to change. Department store has been consolidating for 100 years, and it's been fundamentally going through transformation. I think that needs to continue to accelerate the rate of change. And that's where I go back to different kinds of partnerships and business models. You don't need nearly as many department stores as you have. The footprints, I think, have to change. And you see it in Macy's, for example, who will likely be one of the survivors, looking at new formats, smaller formats. But there's so many ways that you can shop for product that I'm not so sure the traditional department store, as we used to think of it many, many years ago, is the way that you're going to go. So you've got to think about those namesakes. How do they evolve? And you'll see many of the brands go away.
I also think it's interesting, just to add to what Steve said, when you think about the department stores and how both Macy's and Nordstrom are investing in their off-price businesses and moving Backstage and Macy's online as well to increase that, you're starting to see this blurring of the sectors that I think will continue as well.
Great, thank you. The next question wasn't designated to any specific person, but what is the impact coming out of 2020 on supply chain, and what will successful businesses, retailers, brands change about their business model for 2021?
I think the supply chains are certainly under pressure, right? The shutdown of factories during the March, April timeframe, the catch up, the stress that's on the supply chain is impacting all sorts of businesses. So, and I'm not sure what it looks like coming out, Shelley, quite honestly, to answer the question. But I do believe that supply chains will find product closer to their consumers. They'll be more agile. They'll find multiple delivery options. And for people like us that have 3,100 stores around the globe, we'll use that as a drop point in our supply chain. So again, I think it's about agility. It's about ability to react to a changing dynamic in the marketplace.
I think, Dick's, one word that's most important is agility. You're going to see a lot of changes, localization, near sourcing, things like that. And go back to the beginning theme of today's discussion, which was about the holiday season. I think that stress in the supply chain is going to lead to a much earlier shutoffs on shipping and things like that for this holiday season.
Great. I'm going to add another piece to this. I just got another question in from someone else in the attendees. So if you're a startup brand, mainly running an e-com business, what would be your wholesale strategy, or should be your wholesale strategy for 2021?
Let me jump on that one for a second. When somebody like a Warby Parker, which started as a DTC, and they opened up their first few stores, you saw a 3x volume on their DTC business. So there is this convergence of brick and mortar moving towards the digital and digital moving towards a brick and mortar. So I think if I'm a DTC brand, there should be some element of generating some awareness, excitement by utilizing a footprint. It could be a pop-up, it could be a store within a store of a Nordstrom or a Macy's or wherever, depending on the price point. But there is some role for a physical presence for a DTC brand.
Yeah, I think you said it well, Steve, that I don't think there can be single channel players anymore. I think that you have to have some semblance of a physical presence, whether it is a pop-up, whether it's something there and gone. But I think that's the way that you strengthen your connectivity with your consumer.
Thank you. Jennifer, I have a question for you. What are the consumer step changes from 2020 that lead into holiday, but also lead into 2021 outside of the obvious digital commerce?
Yeah, I think there's a few secular ones that accelerated through this pandemic and likely will be maintained going forward. The first would be, focus on health and wellness. And again, that will impact everything from the food you're consuming to how you're getting your fitness classes, to the sneakers you're buying, to the clothes you're buying. The second, I think, is a focus on doing well by doing good and sustainability, and buying from companies that, from a conscious consumerism perspective, are to what Dick is doing at Footlocker, investing in their own communities and their own employees, and thinking about buying from companies who have thought holistically about that. And I think there's a big focus on sustainability generally. And we've talked about in the past the greening of consumers. And I think thinking through that in terms of how much do I actually need, and am I spending on the right things? I think this whole pandemic has forced everyone, professionally and personally, to have a reprioritization of what's important to them. And I think that will spill over to their spending patterns as well, and just have a much more thoughtful impact on spending. And so I think we'll see that this holiday season. I think that we'll see that in 2021, and how retailers and brands seek to address those three things will be quite important.
Great, thank you. I have one last question before we close our webinar. It's to you, Steve. They're asking, who are the winners and losers? So I'm going to say you probably aren't going to shout out who the losers are, but in your mind, who are the winners that are doing a great job navigating this pandemic? Obviously, Footlocker being one of those, but are there other real winners in your mind?
Well, I think it's Footlocker is a winner, but I also think it's the big boxes that were there for safety purposes. It's the Home Depots, the Lowe's, the Walmarts, the Targets, all of those, the grocery stores that proved agile. They were the ones who were there in the beginning of the virus, but they capitalized on it. So it's not just about the safety factor. They've started to understand the trends that Jennifer's talking about and are broadening out and building on that position, but they're also the ones who had invested in technology. So I think that there are a number of winners. There are going to be a lot of winners in this. I think that Jennifer's comment on sustainability and community, those are going to be the ones that the consumer, especially that Gen Z customer, are really going to be focusing on. And so there are going to be a lot of winners playing down the road.
Great, thank you. Well, I want to thank our guests, Steve, Dick, Jennifer, for participating in our webinar today. You guys were great. I'm sure our participants will gain great value from the conversation. So, Robin, you want to close it out and say goodbye?
Yeah, I just want to thank you guys so much for having this conversation today. And everybody in the audience, I thank you for joining us. And I am sure you picked up some good, relevant knowledge from these guys. Thank you very much.
Thank you for tuning in to the Robin Report podcast series. If you want to find out more behind today's program, be sure to check out therobinreport.com and sign up for our email list for the daily digital reporting on everything of importance in the retail and related industries. The Robin Report is a trusted source of knowledge, insight, and analysis for today's retail leaders. Stay connected with Robin Lewis on LinkedIn, Twitter, and Instagram. Visit our website for upcoming episodes. We look forward to your joining our next episode.